but I actually bought more shares of Apple because I just cannot help but believe that Apple is going to feel some kind of way about sort of being dissed in the AI space. I bet they have something up their sleeve. I kind of feel like they're going to make an acquisition that's going to really move their stock price. But even with that said, Apple stock has still done pretty good, I think, in the last few months. Or maybe I'm delusional here. Let me take a look here and just kind of share the screen. Yeah, the last week it's had a pretty good week, and there's a lot of speculation that Apple's going to do an acquisition of an AI company, which is going to make a big difference. So the last 6 months, okay, you got a nice 14%. That's really good. That's really good. Year to date though, 4%. So it's had a little bit of a dip. But the last 6 months, it's been pretty strong. But the last year, 9%. That's not terrible. Last 5 years, you've at least doubled your money. So that's not bad, 125%. So I like Apple because Apple is stable in terms of the fact that they still sell a heck of a lot of iPhones. They don't, it's a little weird because Apple's been so lethargic on AI, but they still sell a lot of iPhones. They have a lot of cash. They're a big, strong, stable company, and I could see them making an acquisition, just saying like, okay, let's just find some company that for and buy them for $70 billion or something, and then we'll jump to the front of the pack. So I did add Apple to the portfolio. All right, so moving on. Let's see. Next question. Okay. So small caps. Just to finish that question, small caps have done well recently because the rally's brought it out. Here's something that's really big. I meant to tell you this. There's the Federal Reserve is going to be cutting interest rates consistently over the next year unless something drastic changes, unless they have a significant inflation problem. The reason that they're probably going to be cutting interest rates is because the economy is suffering a little bit. There's job losses. And I've mentioned specifically that mostly like college grads and stuff like that. Before it was like DEI and government jobs, and that hit black people pretty hard. Now college grads are just not getting jobs. I saw an article today from a computer science professor at Berkeley, Berkeley, who said his students are not getting jobs like they used to at all. He said before, just 3 years ago, 4 years ago, if you major in computer science, you could write your own ticket. It was really easy to get opportunities. You would get 5 job offers. He said now they're lucky if they get one, and that's Berkeley. That's scary, right? So this is gonna eventually catch up. What um, analysts tend to believe is that right now the stock market's ignoring it completely. The stock market don't care. And that's the thing. When you're a stock market investor and you're making all your money in the market, I don't know. I guess maybe investors are a little bougie because or detached from the working realities of the rest of America. And so the biggest things they're thinking about are um, inflation and Fed cuts, and mainly Fed cuts and earnings, right? They're wondering if companies' earnings this season are going to be strong, and that the Fed is going to do its job and keep cutting interest rates. If those two things happen, they expect a rally for the rest of the year. They expect that this market's going to continue to skyrocket. Um, the unemployment issue, though, through AI is something that's gonna, they believe, could creep into the numbers over time. So maybe like about a year from now, somebody suddenly wakes up and says, "Oh my God, you notice how many jobs are being lost from AI?" And it's already happening. Companies are already telling you. So basically, the Fed is going to keep cutting interest rates. The reason that most people would argue that you want to be long in the stock market during that time, long meaning you want to own stocks, is because there's a saying in investing called "Don't fight the Fed." Don't fight the Fed. You don't go in the direction of the Fed, the opposite direction of the Fed. The Fed is the ultimate tailwind. They are the Wizard of Oz. They are the ultimate economic manipulator in the United States. That's why Donald Trump spends so much time attacking the Fed and asking them to lower interest rates because he knows if they lower interest rates, that's going to boost the economy. So that means that when you get into another cycle similar to what we had in 2022, where they start raising interest rates again, like if inflation gets out of control and they say we're gonna have a series of rate hikes over the next year, that's when you kind of run a little bit. You don't run, you don't sell everything, but you want to be cautious about jumping into that market because then you're going in the opposite direction of the Fed.